Hi guys, I'm not exaggerating when I say this, but global financial markets this week have been more dramatic than a Netflix series. On one side, you've got Trump first threatening Europe with a new trade war, basically saying, if Denmark doesn't give me Greenland, I'll sanction you. And then, literally, the next day, he backs off. On the other side, you've got Japan, massive debt, inflation still high. And the new Prime Minister Sanae Takaichi suddenly comes out and says, we're cutting taxes, and what you start to realize is something very interesting. Politics is going crazy, and the market is going all in. Not retail investors gambling on meme stocks, but the biggest, smartest money in the world, hedge funds, institutions, sovereign funds, all activating old-school, hardcore trading strategies at the same time. Let's walk through the 8 main ones. The first one is called the basis trade. It sounds complicated, but the idea is simple. You try to profit from tiny price differences between the bond market and the futures market. The problem is, those differences are so small that you basically make nothing unless you use massive leverage, so you borrow huge amounts of money to amplify the returns. On Wall Street, this trade has a nickname, picking up pennies in front of a slowly moving steamroller. Most of the time, it looks safe, but when volatility hits, you get flattened. Right now, the size of this trade in the US is close to $1.5 trillion. In other words, there's a giant leverage bomb sitting under the bond market. The second strategy is the yield curve steepener trade. This one is basically a bet that inflation is coming back and long-term interest rates will rise faster than short-term rates. So investors go long short-term bonds and short long-term bonds. And this trade is everywhere right now. The US, Germany, Japan, the gap between short and long-term yields is at multi-year highs. And what that really means is, the market does not believe in long-term stability anymore. The third one is the carry trade, one of the oldest trades in global finance. You borrow money in a low-interest country like Japan, in yen, and then invest it in high-interest countries like emerging markets or Latin America. Last year, this strategy returned around 18%. Sounds great until the yen strengthens. Then everyone gets wiped out at the same time. In 2024, when Japan raised rates, global markets saw massive forced selling. So, the real nature of the carry trade is simple. It works when the world is calm, and it explodes when anything goes wrong. The fourth one is the currency debasement trade. This is for people who believe governments are printing too much money, and fiat currencies will lose value over time. So what do they buy? Gold, precious metals, real assets, and this isn't retail investors. This is central banks. Pension funds, sovereign wealth funds, gold hitting record highs is basically the global financial system voting against fiat money. The fifth strategy is sell America. This is basically Trump's side effect. Every time he talks about tariffs, attacks the Fed, or creates geopolitical tension, global capital's first reaction is to sell US stocks, sell US bonds, and reduce dollar exposure. The problem is, Trump often changes his mind. So the market sells first, and then he backs off, and everything rallies again. That's why Sell America has turned into a short-term emotional trade, not a long-term trend. The sixth one is the classic 60-40 portfolio to 60% stocks, 40% bonds. This used to be the safest, most boring strategy in the world. But this week, both stocks and bonds fell at the same time. Historically, that usually only happens during periods of high inflation or serious policy mistakes. In other words, even defensive portfolios are starting to look unsafe. The seventh group is what people now call Trump trades, Taco and Big Mac. The first one, Taco, stands for Trump always chickens out. The logic is simple. Trump makes a strong threat. Markets crash, you buy the dip, then he backs off, and the market rallies. So far, this strategy has worked surprisingly well. The second one, Big Mac, is about betting on the midterm elections. The idea is that Trump will push aggressive, popular-sounding policies to win votes like capping credit card interest rates, pressuring defense companies, or intervening in the mortgage market. These policies feel good short-term, but long-term, they mess with the financial system. The eighth one is the famous widowmaker trade. shorting Japanese government bonds for the last 20 years. Anyone who tried this basically lost money and gave up. That's why it's called the widowmaker. But now things are different. Japan is raising rates, ending yield curve control, and government spending is rising. Long-term Japanese bond yields are at the highest levels in decades. A trade that used to be financial suicide is suddenly becoming potentially profitable again. Still extremely risky, but for the first time in years, not completely crazy. Now, if you look at all these trades together, there is one common theme. Global capital no longer believes in stability, it only believes in volatility. Whether it's shorting, carry trades, gold, or betting on Trump's personality, all of these strategies are based on one assumption. The world is entering an era where politics drives markets, emotions drive prices, and volatility drives returns. And for normal investors, the key lesson isn't to copy these strategies. It's to understand one thing: when even Wall Street starts making money from memes and political drama, it usually means the market has entered a very high-risk game. I'm Sophia. Follow me to discover more investment opportunities.